Hello everyone, this is Ahura. We'll be with you with the short review on global economy in the week ahead, which is, we can call it the central banks week. As always, let's first start with with review on previous week to see what we had last week, what happened, and then we can go forward and check the week ahead. Last week also we had some central banks meetings, which was important, especially the European Central Bank, which they held the interest rates unchanged at 2% as it was expected, but the only change it was in their economic growth expectations, which increased to 2.1% for 2025 from previous 0.9%. In Turkey also we had a central bank meeting where CBRT they cut the rates more than expected from 43% to 40.5%. And in Russia also, Central Bank of Russia or CBR, they cut the rates less than expected, while market expecting to see the interest rate at 16%, down from 18%. They cut the rates by 100 basis points only to 17%. That supported the Russian ruble against dollar and other its rivals slightly, but generally, I mean, the condition is not still in favor of Russian rubles. In United States also we had inflation numbers and labor market data as always that is publishing on Thursday. Inflation numbers showed that the headline consumer inflation increased by 0.4% on monthly base, slightly more than 0.3% expected and twice more than 0.2% in July. On the annual scale, core inflation stayed unchanged at 3.1%, and headline inflation on annual scale increased to 2.9% from previous 2.7%. However, when we're looking at the other data like consumer, the PC price index, actually, sorry, the PC price index, we can see that the core PC price index at 2.9%. Still, both of them again much higher than the central bank targets. In a week ahead, that was what happened previous week. In a week ahead, what's going to be more watched and be focused? It will be the central banks meetings in the United States, in Canada, in UK, and also in Japan. Before checking the central banks meetings, let's check first the other data that we're going to have this week, and then I will go back to the central banks. On Monday, China will publish its industrial production and retail sales. We expect to see both of them to increase compared with the previous month. In August, August numbers are going to be slightly better. The same almost trend that we can see in the previous months after central banks more support and the government and central banks more support from the consumers. As mentioned, again, I will say that the Chinese biggest concern in the economy is not the tariffs. It's the domestic demand. The Chinese, they have to be more somehow, they have to be more encouraged to spend the money, to buy the things, and this negative inflation should be over to support the Chinese economic growth. Tuesday, UK's labor market data will be published. We expect to see unemployment rate unchanged at 4.7%, while the climate account change should increase to more than 20,000 while the previous month it fell by more than 6,000. We're going to have the industrial production from Eurozone also, which is expected to increase. ZEW also supposed to publish the result of its surveys. For the Eurozone, we expect to see that economic sentiment slightly increase from 25 to 26, 27. But if you look at the Germany, the 34.7% supposed to fall to 25. That's for the economic sentiment. Retail sales data on Tuesday will be very important in the United States as well, where we can understand what's going on in GDP numbers for the third quarter. We can expect, we can have more or better, or we can say the more brighter idea of how we can expect what we can expect from the GDP numbers. We expect to see the retail sales to increase, but slightly less than previous month by 0.3%. And retail control also, retail sales control are also supposed to increase slightly. Industrial production also after 0.1% falling in July. In August, we expect to see slightly increase by 0%. I mean, to stay flat, better than previous month, better saying this way. Wednesday, we're gonna have the export and import data and trade balance data from Japan, where we are expecting to see the shocking number of 4.2% fall in import numbers and 1.9% fall in export data. In line with the political tensions that we have in Japan, these numbers can change our previous expectations from Bank of Japan. We will talk about that later. On Wednesday, we're going to have the inflation numbers from United Kingdom, which is expected to stay around 3.8%, 3.7%, not too much change, which it's very critical levels for the, I mean, it's a critical condition and momentum for the UK economy with such an inflation at the same time with the slow economic growth. On the labor market, as mentioned, which we are going to have its data from UK on Tuesday, we shouldn't forget that as average income, excluding bonuses, supposed to increase by 4.8%, slightly less than previous month. That says that including bonuses is supposed to increase by only 4.7%. This data says that they can support the slowing economy in the next months, but for now, the inflation is still high, 3.7%, 3.8%. It's very high levels. We shouldn't forget that the UK inflation was falling like 4 or 5 months ago around 2%, and even 1 month it fell to 1.9%. But now the inflation is very risky. Again, housing market data in United States will be very important in the same day that we're going to have the Fed meeting. Building permits supposed to increase slightly, but housing starts still not too much strong compared to previous months. Still, we can say that the recently lowering interest rate and the mortgage rate can affect the market in the next month. This month still, we're going to have the time to see its effect on the market. On Thursday, initial labor data, we can say that initial jobs claims in the United States will be one of the most important data to be watched. We expect to see that this fell again under 250,000 average that we have. And see the initial initial claims for unemployment benefits at 214,000. On Friday, we're going to have the Japanese inflation numbers, which is one of the most important data to be watched. We expect to see the inflation slightly ease to 2.7% from previous 2.1%. One of the other data in line with the GDP numbers that can change our previous ideas of the increasing the rates for September. At the same time, we now in Japan, we had political changes. Prime Minister resigned, and now the government is going to change. And all this condition and the situation that we have in Japan, it can support the idea of holding the current rates until the market and generally the economy can get to some stable level, and the new government to start its job, and we can understand how will be the economic expectations or economic policies of the new government. So that's why we expect to see, we expect to see that the Japanese Central Bank or BOJ to hold the interest rate at 0.5% of current levels. In United Kingdom also, we expect to see interest rates unchanged at 4%. The main reason is because of inflation. The interest rates supposed to be lower. I mean, if you look at the economic data such as labor market numbers, unemployment rate at 4.7, or if you look at the GDP data, they were really disappointing. If you look at the industrial production and manufacturing production, they are falling. Looking at these data, they say that we have to cut the rates. But at the same time, looking at the inflation numbers at 3.7%, 3.8%, they say that they have to hold the interest rate at the same levels until we can see some downtrend in inflation. And the interest rate should be at this level to lower the inflation numbers. That's why we now expect to see the BOE to hold the current rate with 8 against 1 vote for cutting the rates. In Canada and United States, on the other hand, in both countries, we expect to see 25 basis point rate cut. In Canada, from 2.75%, we expect to see the rates to slow down to 2.5% as the Canadian economy slowing down, while the inflation also, I mean, it's in acceptable level. So the Bank of Canada or BOC can cut the interest rate with not much worries about the market effects. Now the Canadian economy really need this cut. In United States, things very interesting. While we have labor market data, cooling labor market data, at the same time, economic data, they are not so bad. But generally, putting together, we can see that the economy grew, losing the momentum. Even it's not, I mean, it's positive, but it's losing the momentum. At the same time, labor market, when we're looking at the controller, we can see that the 911,000 jobs gone from beginning of 2005 till now. Market was expecting something around 500,000 less jobs. But now we can see that the labor market's really expecting also, I mean, need more attention. And the central bank supposed to keep the balance between the inflation and labor market. Now, that's why, I mean, if you look at the average income also gains started slowing down. If you look at the GLT's numbers, you can see that now the number of unemployed, they are more than GLT's, more than the new opportunities or vacancies. We can see that generally the labor market is cooling, and that's why the central bank needs some need to show some support from this current condition in the labor market. So that's why we expect to see that we expect the 25 basis point rate cuts in for Federal Reserve. But how is that going to change the market? As for dollar index, we can say this 25 basis point rate cut with more than 90% chance for now is already priced in the market. So cutting the rates by 25 basis point is not going to change anything in the market. Not we cannot say anything, but it's not going to have some big effect in the market. What is very important is the announcement and also Fed Chair Powell press conference, and also the dot plots. Things like that. If you see the announcement, if you see the tone of speech of Fed Chair Powell's speech, if you see the more focus on the, for example, if you say that on labor market, in that case, we can say that, okay, the market is going to expect more rates cut, at least 2 more rates cuts for 2025, which means dovish policies. But in the statement and in the announcement, if they focus mostly on inflation expectations, if they focus more on underlying concerns about the inflation, that can be read as a hawkish policy and support the dollar and put the pressure on the stock markets. That's the difference. But if they say mostly they talk some none of them, they do not emphasize none of them, and mostly they emphasize on the season. I mean, just like data-based movement and decisions, nothing exactly about the inflation rate or nothing exactly about the labor markets. That can be side movement for mostly for US dollar and negative again for stock markets. That's our expectation. So mostly our base expectation is to see the side movement between 97 and 98 for dollar index. But it's still all these data in the midterm, again, they're supporting the gold prices. Generally, the gold is expected to increase further. Now, the most central bank, they increased their price expectation for 2025 from previously 3,600 around that to 3,800. Now, the market expecting to see again the central banks expecting even higher prices for gold. Even if we see some correction, correction could be the opportunity to buy dip. As for the energy market, if last week we had OPEC, EIA, and IEA monthly reports. EIA and IEA reports mostly they were about the more supply in the market and less demand and the price around 50, 51, 50%, $50. That can be negative for the oil. While weekly EIA reports also showed that the US gas and, I mean, gasoline, gas, and oil inventories increased previous week. All of them also, again, could be negative for the oil market. But at the same time, the OPEC report was not such much, I mean, that much cautious about, cautious, and they were not talking too much. I mean, I mean, it's better to say that they don't worry too much about the oversupply in the market, as most of the OPEC, many of the OPEC members, we cannot say most, but many of OPEC members, such as Iraq, they do not able even right now to supply as much as they need to. I mean, that means that, I mean, even if they're planning for more supply, technically, it is less likely to see these numbers in the market. On the other hand, geopolitical tensions will be again very important for the oil and energy markets. If we look at just economic data, we can see the overall market condition is not such positive for the oil price, but geopolitical tensions can change the markets, not depend on economic data. As for the stock market, if you look at the S&P 500 code or CFTC data shows much less interest in a buy or net buy positions in S&P 500, which can increase the shock or expectation for lower prices for this S&P 500. Same condition we can see for the Dow Jones and Nasdaq as well. So generally, while the S&P 500, Dow Jones, and Nasdaq, all of them, they are recording highs, they are printing new records high, they are positive and increasing. Technically, also they are increasing, but at the same time, looking at the CFTC numbers and investors, they're getting more cautious around these levels. So that's possible. At least we can see more, some correction, at least it's technical correction. But at the same time, the central bank's meetings will be very important, as mentioned before. What scenarios and which scenarios can have which kind of effect in the market. As for the cryptocurrencies, generally not just by the Federal Reserve meeting, Fed, BOE, BOC, and also BOG meeting. If generally we see the dovish policies in the market, that can be supportive for the cryptocurrencies, especially for the Bitcoin. And if we see more hawkish policies and tone in the statements and the announcements, then we can see this dovish tone can be negative for the cryptocurrency and especially for the Bitcoin. Otherwise, we are still positive about Bitcoin, especially the Bitcoin about 109,000. We can say that uptrend can continue further. That was what happened previous week and what's our expectations for the week ahead. If you had any other question, you can write in the comment section under the video. I'll try to get back to you as soon as I can. Have a good time. Bye.